Good morning on this fine Sunday morning. I hope I find you well. Just a quick word about Bitcoin. Looking at this weekly chart, we now this looks bullish to me. This looks extremely bullish long term, big picture. We've gone all the way back to the highs there, December 2017 highs of nearly 20,000. We're also touching this trend line, this magenta trend line on last year's highs. And now we broke this trend line in a bullish fashion. We got above the 21 weekly in April, and we broke this trend line in a bullish fashion in July. And now we've come up and then perfectly, as seen so many times in Bitcoin before, we've come down, we've touched on the 21 weekly EMA, which is used often because of Fibonacci retracement, Fibonacci sequence. That's why the 21 week EMA is used. Now we've come down, touched on that, and then gone back upwards again. This chart looks very bullish indeed. If you go back, similar thing happened in 2015, at the start of the multi-year bull run. Just let me get the scaling correct. As you can see, we had this here, we had the bear market. Let's draw a line on there. So from there, we had, again, a big line coming down, a bearish trend. Sorry about this. We have the trend line there. Bear with me a second. Let's get this back to where it should be. We touched on this here. Okay, so we got above the 21 week in October 15, went up, came back down, twisted the 21 week immediately weekly moving average. We rolled along it for a bit, then we shot up again. We came back down, we tested the 21 week. We wicked below it, but we didn't close a candle below it. And we went up again. We went right up into 2016. This is the bull market, the long bull market. Came back down, tested the 21 week, went back up again, went back down, tested the 21 week. As you can see, it works perfectly here. So we go back up again, we go right up, we come back down, we test the 21 week, we go back up, we come back down, we perfectly test the 21 week moving average, we go back up again, and we stay above it then for a long, long time. We stay above that weekly 21 and then blow off top after a hype cycle back below the 21 week, closing candles below the 21 week. Long bear market, long trend line, just broke the trend line for the first time just recently, up back to the 21 weekly. We test it again. So this chart looks extremely bullish. As you can see, looking at past patterns and just the feel of that chart. Usually when you see a chart like this, you think bullish. Now, the only thing that I think will affect this is the stock market, the election. We've got a presidential election coming up. The stock market's due for a correction. The correlation between the stock market and Bitcoin has been prevalent now for a while. It's no evidence of it being decoupled. There's not a shred of evidence to say that Bitcoin, BTC, has decoupled from the stock market. They follow a similar path. They both came down at the same time in March, and they've both gone up since. Now, it's presidential election in 45 days. This means that the stock market could be due for a big correction. We could go right down here. We could come down below the 21 week. We could even come down to 2,800 here and test these support here. Now, if that's the case, I think it might drag Bitcoin down with it. There's a very good chance of it dragging Bitcoin down with it. The Bitcoin chart looks very bullish, and there could be a decoupling. But at the moment, there's no evidence of that. So I've got a feeling the stock market could pull Bitcoin down. Let's have a look to see what is being said about this. how the stock market has performed before, during, and after presidential elections. There's a lot going on in an election year. Here we got a chart here of previous incumbents to the presidential election role. We had a lot of growth here when President Reagan was in. This isn't really telling about election time. There'll be increased volatility. Historically, volatility in the stock market is elevated in months leading up to an election. This is logical because markets hate uncertainty. So for investors, it's important to step back, put feelings aside about politics, and objectively assess the situation and what it might mean for your personal finances. Beware of bold predictions. In 2016, the night of the 2016 election, as more states began reporting Trump victory, stock markets sank rapidly. The S&P fell by more than 5% hearing about the Trump news. But it's worth noting that after Trump came in, the stock price rose remarkably well following his time in office, his insertion into the office. History shows that the stock market and the economy are key indicators of who wins a presidential election. The stock market's not the economy. You can't think of the stock market as the economy. It sometimes mirrors the economy, like if the economy is doing poorly, the stock market will begin to perform poorly and present buying opportunities. Always think of the stock market when it comes down as a presentation of a buying opportunity. History shows avoiding a recession in the 2 years leading up to the election is a key of re-election. Now, we've had a recession recently. We've had one of the worst recessions that's just began. There's no evidence yet that we're coming out of this recession, mainly due to COVID, but there were a lot of insiders expecting a recession. The performance of the S&P. So research shows how the stock market performance leading up to election has also been a major indicator of the outcome. The performance of the S&P 500 in the 3 months before votes are cast has predicted 87% of elections since 1928 and 100% since 1984. See, that's key. That's a very telling stat that we need to look at. The S&P has been a great indicator of presidential elections. As you can see here in this chart, price performance before presidential elections, the incumbent party won in the light blue and the incumbent party lost in the dark blue. It should be of no surprise that the markets perform better during a year when an incumbent president is elected compared to a new administration. So if the one in power, like Trump, if Trump's re-elected, the markets will perform better if he's re-elected. That's the theory, because it's more settled, less uncertainty. Markets tend to prefer that. The markets hate uncertainty, like I said. A new president can create more unknowns, the potential for increased regulations, higher taxes, and all of this shifts the market perceives as anti-business and can influence sentiment. Presidential elections throughout history. So the calendar year performance during presidential elections. So the orange is the stocks and the yellow is the bonds. So a new president is elected. We've only had 9.3 increase. We're talking about stocks mainly here. We're talking about the S&P, the stocks. We're not really talking about bonds, although it doesn't look like they correlate here either. So we'll just look at the orange. So if there's a new president selected, they rise 9.3. In presidential years on the whole, they rise by 11.3. But if the incumbent president, the president already in, wins, 13.4. That's quite damning. That's quite a big mark. It's nearly 50% more. So as the market close, so historically, bonds and stocks perform better during an election year compared to the year after. I think this year will be different. We have COVID-19 to think about. The global stocks are mixed under different party leadership. Um, So, according to dimensional fund analyzers, since 1973, average annualized returns for developed international stocks were always positive over a term for democratic presidents. But since 1989, emerging market equities were only positive 50% of the time under a Democratic administration versus 100% of the time under the Republican. Like the US stock market, returns of global stocks depend on multiple factors, many of which are outside the control of any administration. Natural disasters, we have to say that COVID could be classed as a natural disaster, pandemic. Terrorism has an effect, a political scandal or turmoil within a country, and geopolitical tensions between countries, trade policies, international relations, and the relative strength index of the dollar are just a few factors. The dollar is very interesting for me. We will finish this and we'll go back and have a look at the chart of the dollar quickly. I haven't looked at the chart, so I'm just going to pull the chart up and have a brief look at a few indicators ad-libbed off the hop. Because the dollar, very interesting. When we have a weaker dollar, we have strong anti-fiat, strong gold, strong silver, strong Bitcoin. Some interesting stats about the president, about the Republicans and Democrats when they have control of the Senate. Since 1933, the highest returning partisan control combination for the S&P 500 has been Democratic Senate, Republican House, and Democratic President, where returns average 13.6% per year. In 2020, this will require a reversal for all three. Our current mix of Republican Senate, Democratic House, and Republican President averages a 10.8% return. This combination is likely if the President Trump wins election. Under a Biden victory, the likely scenario is a Republican state, Democratic House, and of course, a Democratic president. Interestingly, this combination has not occurred since Grover Cleveland in the election of 1886. Wow, that's incredible. That would add to uncertainty. Right, we'll have a look at that dollar chart now. No, that's not the chart I want. Bear with me a second. The US dollar index, right. Right, we've got the 21 weekly EMA up. They're on a weekly chart. So let's have a look. The last time Bitcoin and gold, well, Bitcoin especially, was on a bullish run, we were up here. We were up here. And then the dollar went down, right down here, and Bitcoin rose dramatically. So Bitcoin likes a weaker dollar. The dollar went from highs of 103.65 down to 88.90, 88. What's the low here? Lows of 88.25. That was around the time when Bitcoin was topping out. Bitcoin topped out around here, and the US dollar was 93, and it kept getting weaker, and we had an altcoin rally, and the dollar was at its weakest. Since then, the dollar has strengthened. We've had highs of 102.99 in March of this year. Let's have a little zoom in on this chart. We'll have a look at the lows of 2018. Let's have a look at the lows of 2018 to the highs earlier this year. We've been down. Let's do it from the body of the candle and the body here. So on a weekly chart, we've been down and we've touched on the Fibonacci 786. We've bounced strongly off of that level at 91.78. We're looking to come up now and test the 93.95. That's the level to look for in the US dollar. The next level up from the fib retracement. Fibs work very well. As you can see, the fib 786 has been tested perfectly there. We've not retraced right down. Let's have a look on a shorter time frame chart. So let's have a look at the daily and get the daily 200 moving average to see where we are with it all. The daily 200 is a good indicator for overall market strength and weakness. To get the big picture, getting the big picture, the 200 daily is telling. Oh, it looks there like we are battling the 200 daily. We dropped. No, we're below the 200 daily. We're way below it. So let's have another look at the Fibonacci on a shorter basis. Let's have a look from the March lows to the highs. We've come down way below that level. We battled the 786 for a while, and we also battled the Fib 50 from those lows. So the dollar, it looks like it could be bottoming there. It's interesting. Let's have a look on a shorter time frame. So let's have a look, see what we're doing in the next few days. It looks like we've come above the 382 on this shorter swing. Yes, it does there. Look like we tested the 382. And like I say, it looks like we're heading up to that 93, 95, the fib 618, the golden fib on the weekly chart. For now, if we close above this today, 92, 93, we're looking at 93.20. Let's have a quick look back at Bitcoin. On a daily chart, Bitcoin. I think Bitcoin's completed a swing failure pattern. I think Bitcoin could head down this week because yesterday we went up. It looks like we've had a swing failure pattern in Bitcoin. I do believe we have, which means we're going to come down in Bitcoin now this week. When we went up there, a swing failure pattern is where we can't get above previous highs. And it's looking like that, to be honest. To be fair, Bitcoin needed to get above these levels here, and it hasn't done that. We're currently found resistance at the 200 candle on the 4-hour chart. We've come back down below it and then picked up and used the 21 candle, and we currently got resistance in that. As far as the wave pattern concerned, I'm looking bearish at Bitcoin short term. Let's have a quick look at that. There, we've come down to 236 there, but A, B, C, and now D will come down.